What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is October 20th of 2023. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I want to spend some time to talk about Bitcoin's price action, which has been able to regain some of its prior losses following the Bitcoin ETF fake news that was released on Cointelegraph and spread like wildfire throughout the crypto space. Outside of that, I want to also dive into some key ratios and charts that I think are going to really help us to answer the big questions here. Outside of the small price moves, we need to ask the big questions. Is a Bitcoin ETF likely? And do we really have the strength to continue forward to a new bull market? We'll talk about those charts as we go throughout the video. We're also going to be diving into the macro sphere, talking about treasury yields and the recent comments from the Fed about future monetary policy outlook, and so much more, as well as a sponsored review of Tectum Softnote, a new technology that's aiming to not only revolutionize cryptocurrency, but most importantly, focus on allowing it to be utilized for payments in real-world transactions. A really big breakthrough that I think you guys are going to be interested in, so stay tuned for that. You guys won't want to miss it. And if you happen to enjoy this video, consider dropping a like. It's one of the greatest ways you can support the channel. Let's go ahead and kick off the rambling. All right, guys. So I want to spend some time here to talk about the longer-term trend trajectory here. I think what we're seeing here is a further continuation of what we've seen since back in September, as we saw buyers come in here yet again here for a couple of weeks around this 25K range, similar back to June, while the response has taken longer to get back into this resistance channel between 28,500 and 32,500. It became clear here that buyers were providing some temporary bid side support, and the question from here on out is going to be whether or not we'll be able to clear through this channel. And as we can see here, we were able to recoup some of the losses that we had from that top wick up all the way from 30K down here towards 28,000 over the last few days, especially here within the last 24 hours. So from here on out here, I don't care so much about what's going on in the day-to-day time frame. And an important thing for you guys to know here, again, at the end of the day, I know some people think we're shorting the market, we're going all in betting to the downside here. We've been remaining in fiat for the most part since back in 2022 in the summer, when we sold out our altcoin positions. And boy, that was a good decision we did, because we weren't massively exposed to Bitcoin. We were exposed to altcoins at the time. And those altcoins are far and few from where we were back in that period of time when it comes to valuations. Now, sure, we sold some of our Bitcoin around 25K, and Bitcoin is definitely trading a little bit higher than that, but we've been able to avoid a year of worrying about trading and stressing about the market here. The question here I really care about at the end of the day is I don't mind paying a premium for Bitcoin here if we get it wrong. I'm totally fine in admitting that. The question here is whether or not we're going to be able to clear through this channel of resistance, which each and every time has proven as resistance for Bitcoin. This is again why I try to bring people back to the center here. I'm not trying to be a perma bear or bet against Bitcoin. And it's why we do believe here that we are very well setting up here as we enter in to the channel resistance for another third wave to the downside that will probably hit harder than any of the prior resistance that we faced in the past at this range. Because the more times we come up with this range and we can't clear through it, that's going to be a problem. Now, if we can clear through it here, well, that's good news here. Maybe the bulls have an argument here if we can get above 33,000. But there is an important thing to keep in mind. We've got the prior line of support here that could start to play as resistance, and we are going to have to mainly do one thing. I think there's a very good chance if we clear up through that range, playing in the bulls argument here that we're in a new bull market and that we're going to smash through this and move higher. If that is the case, we need to be able to prove that this is going to become support again. Notice here how if we take a look back at the prior bull market, we can see that this range here between 28 to 32K was critical support. And even with that, we weren't able to extend really beyond the prior highs in April. We had a double top here. So I think the question remains here whether or not we're going to be able to get above this channel here of resistance and start to utilize it as support to propel higher here in the case of a Bitcoin ETF. And I got to be honest with you guys here, as I'm looking across the ratios here, the thing that's going to be making this happen is if we do get an ETF. I think that's the only shot here. All the other narratives, let's just be candid about that. All the other narratives have failed here for Bitcoin in the near term. Just being realistic about it, right? Again, we can see here that the Bitcoin de-dollarization narrative, with BRICS and everything, we saw the Bitcoin bank run, all that didn't hold up, right? And now we're coming to the same channel here with the same hopeful narrative as we did back here in June. Hopefully that BlackRock is going to get its ETF approved alongside many others. Now here's where I'm going to go ahead and give the bulls one solid argument here. Irrespective of the narratives, I love seeing here as a bullish thesis that Bitcoin is starting to separate a bit from the Nasdaq yet again. Now, it hasn't broken away to new highs here for the past year, year and a half, but what we have seen here is that the Bitcoin Nasdaq ratio is back to where it was in June and July. That is what I want to see here. I want to see that Bitcoin is starting to outperform the Nasdaq, even if the Nasdaq is starting to move down. That is where the kind of asymmetric, non-correlated hedging argument for Bitcoin could be. And if this continues to accelerate higher, I'll be completely candid in saying that that would get me more optimistic on Bitcoin. And at a minimum is going to get me on likely moving my price targets for Bitcoin's lows a bit higher here, that maybe back then at 14, 15K, maybe that was the low. And at max, we maybe get a double bottom in the worst case scenario in a recession, or maybe we find support at 20K, but it's still got a ways to go here before it's gonna set those new relative highs against the Nasdaq. We're gonna have to see if that momentum here can keep up, but it's definitely a step in the right direction considering the support it had at 1.85. But the next chart I want you guys to take a look at here is taking a look at BlackRock, and more specifically not just BlackRock's share price, which you can take a look at it using the symbol BLK, but on top of that, I want to take a look at the BlackRock XLF ratio. Now, essentially speaking, a lot of people have been going out there and saying that, Bitcoin ETF is BlackRock's big focus, it's their big bet, and they're going to own this market at the end of the day. Many people, again, have falsely claimed, I'm just going to be candid about that, guys, because there's a lot of people saying, constantly repeating this point, and it's not true. BlackRock is not going out there and accumulating en masse all Bitcoin miners, etc. BlackRock doesn't operate like that, right? It's a money manager, similar to State Street and Vanguard, which on behalf of investors has various different types of ETF products, not a Bitcoin ETF, but various different types of products that are focused on specific niches or broad passive investing vehicles, like for example, an S&P 500 ETF, like the SPY, etc., that essentially give you that broad exposure to the market. And they have to forcefully purchase various companies that would fit into those ETFs, depending on their market cap, depending on the type of company they are, etc. So I want to clear that up here. But the narrative is that many people would say, well, Nick, either way, if a Bitcoin ETF gets approved, BlackRock is going to own this market. They're going to do great. They're practically guaranteed to get a Bitcoin ETF approved. The SEC they're working in collusion with the SEC. They want to be the first in the market, and they're going to get out there and they're just going to own this market. Well, I want to go ahead and ask for people who believe that, why is it that since that announcement that BlackRock made during the summer, that their share price has dropped from around low $700 range down towards around $622? Or to put it in percentage terms, just to kind of understand the context here, roughly speaking, around a 14% share price decline rather than, say, a 14% share price acceleration to the upside, right? If this is going to be good for BlackRock, then we should be seeing it in the share price. When you divide it, though, by the broader financial sector, which I think is a more fair thing to do, we want to see here if BlackRock, unlike most financial companies, which aren't exposed to Bitcoin in such a high degree and aren't so poised to benefit from it, we want to see BlackRock ideally deviating from it. Again, we want to see BlackRock being a market leader here. If it's innovative, if it's leading forward on the Bitcoin ETF, and it's going to have a whole new revenue stream offering these passive investment vehicles for the crypto space, then we want to see that it's leading here, right? Well, unfortunately, since that announcement back in June, we can see here that BlackRock has lost out by 9.3% against the broader financial sector. That's not looking really optimistic to me, right? And that doesn't look to me as if there's an absolute guarantee of a Bitcoin ETF coming anytime soon. And if it does still mean that there's a Bitcoin ETF, then you've got, again, as we've discussed, the second worst case scenario here, which is that there may not be some huge mega demand here for Bitcoin in regards to people who want to invest in brokerage accounts and pension funds, etc. That's the problem here that I would honestly, at the end of the day, even as someone who leans a bit more bearish, I would really think that that would be bad for crypto. If that turns out to be the case long term, it shows that there's not the buy side demand to justify a new bull market. That would be a big problem. Again, it's not me being overly bearish here, guys, right? I'm just trying to stick to the numbers. And this leads me again towards coming back here towards the Nasdaq ratio. I think you need to see this continue to move higher. This is, again, I think more of the important chart here. as I think it plays a role in determining whether or not Bitcoin has got the steam to really continue and kick off a new bull market. But I also think you need to be watching that ratio there to determine whether or not we've got a chance of an ETF when it comes to the BlackRock XLF ratio that we have on the charts, right? Because at the end of the day, Bitcoin can move up here. It can make these moves, and again, these are sizable moves nonetheless. If you want to trade more short term, hell, there's some really good opportunities where you could trade. And again, if you want to play the game of leverage, so to speak, and trade in the open market and risk a lot of your capital with high degrees of leverage, you can do that, but it's a losing game for most people. That's just statistically speaking. That's not me being a bear. You could go long or short for all I care. But there's a reason here on this channel I don't push you guys to go out there and trade leverage. There's a lot of people out there who will tell you to do that, and they owe you nothing if you make money, but also if you lose money. And especially if you get liquidated, they sure as hell make a lot of money off of your liquidation. It's a casino at the end of the day. I recommend staying away from leverage, whether you agree or disagree with me, guys. Now, the big thing here, again, at the end of the day, is going to see how Bitcoin's price reacts in this range. Don't lose sight here on the hourly chart, the 5-minute chart. Watch what happens here within the daily. Because on the broader macrosphere, guys, there is a lot going on here. And it creeps up on investors slowly but steadily. But the bond market is sending flashing warning signs here that something's going to break here in the coming months. And again, I'd say a couple months here, not to be alarmist. It's not going to be today, probably not going to be tomorrow or next week, or even this month. It's probably going to be over the next couple months here. And we don't know exactly what it's going to be. We have some ideas here of what could cause this recession. But essentially, the markets are signaling that the easy times are ending. I want to go ahead and demonstrate this here through price. Now, what we're looking at here is the yield curve. And while some people believe that this is kind of a boring thing to watch, whatever, this is one of the best recession indicators in the world. And not just one of the best recession indicators, I want to bring people back to reality, because some people, again, since back in 2020, have believed in the idea that equities in the market are not tied to one another. And that can be true during excessive periods of monetary stimulus. You can have stocks going like wildfire, going up to the upside. And that's, again, we care about that liquidity when we're analyzing markets, but we don't have that liquidity. And we can see here in the bond markets that we are not going to have the Fed buying the dip for a long period of time as we are starting to uninvert the yield curve. This is just the beginning of a contraction or a recession. And this is going to weigh in on equities. I want to go ahead and demonstrate this. If we take a look at the last two lows here, January 2007, and for example, here in September of 2000 as well, where the yield curve started to have hesitation and move higher, similar to here in July of 2023. Let's just go ahead and take a look at the S&P 500 and where the market price was, or the index price here for the S&P 500, the top 500 stocks, where they were before, at that moment when we started to have the yield curve bottoming, okay? Let's take a look here. So we go back to the chart here. Our first low here from 2007, right? About a year out before the recession kicked in, was January 2007. Well, that put us right about here, 1400 on the S&P 500. You can see we had a couple months here where prices moved a little bit. They mainly chopped here and then led towards one of the greatest recessions we've had in our lifetimes, and probably will experience in our lifetimes. Now, there are a lot of people out there who are telling you, yeah, but maybe you could trade up here. And maybe we're gonna have a new bull market, and they stretch out the expectations, right? Take a look back at history. Is that a favorable risk to reward profile for you? Let's take it back here again. September 2000. That was the last yield curve top. Right here, practically at peak valuations after the close of August in 2000. That was where the dot-com bubble peak was for the S&P 500. Now, of course, the NASDAQ was a bit more exaggerated because it was the tech stocks. But take a look here. Practically the top in equities. And what happened after both of these periods of time? The S&P 500 collapsed 49% from this period of time here. While it did rise up here another 9% in the interim, it continued far after to go down 49%, both of which were practically 50% traditional recessionary bear markets. Now, Bitcoin didn't live through either of these. Bitcoin practically started to go live in 2009 and didn't really have liquid markets until 2011 to 2013, if we're being realistic and honest with ourselves. what is Bitcoin going to do in these periods of time? Because my understanding, if you guys ask me here, and I don't think this is a bearish thesis at all, I think this is just a realistic understanding of what Bitcoin is that Bitcoin is a money debasement hedge. It does best, I apologize, the trading view thing has been really bugging out here recently, the drawing tool. But my point here is that Bitcoin is a money debasement hedge. It did phenomenally well when money, or specifically the money supply, was being debased, when interest rates were at 0%, when credit was cheap in the economy, and the Fed was literally, through quantitative easing, taking out toxic assets, putting cash into bank balance sheets, and essentially restoring the economy after 2008 to a large extent. We don't have that now. We don't know if Bitcoin can really be an inflation hedge. And I don't think many people are going to want to go towards an asset like Bitcoin that isn't paying them a yield during a period of inflation, when bond yields are continuing to rise higher. And I think that's a big reason why, even though Bitcoin had this acceleration in January, we haven't been able to continue here essentially for the last 2 quarters. We've now entered here towards another 3rd quarter here, and it's going to be a question of whether or not we've really got the steam to continue through this range here. It looks optimistic now, similar to probably how it did back here in June or back here in April. But the question is, will we clear through that range? People constantly ask or question whether or not I'm short of the market. We're not short, guys. But I'm not trading these short-term windows of time. I'm not interested in 10, 20% moves and delving into leverage where you could potentially lose everything if you trade the wrong way, especially not with my entire portfolio for that matter. What I'm interested in is whether or not we're in a new bull market. And I just don't know if I see that yet here. This does not look like bull market price action to me, making some price acceleration here far weaker than that of the previous acceleration in 2018 to 2019. And one where we just go sideways after only 100% move. Time will have to tell here, guys. But when I take a look back at the macro scene, when I see Jerome Powell saying that there's practically going to be no adjustments towards the rates being higher for longer and not stepping away from the idea that future hikes could still be at play, I turn back here towards the treasury yields, and I look at the 30-year being at its highest rate since 2007 and looking like it's ready to continue accelerating higher here, as we've talked about time and time again here in this channel. And that is going to every single basis point increase. This past month, we saw a 0.369% or 36 basis point increase on 30-year yield. Doesn't sound like much. Sounds like, oh my gosh, that's like fractional percentages. Why does that matter? Well, it matters a lot, because at the end of the day here, when you're talking about liquidity flows, even if you're talking about a Bitcoin ETF coming to the front, the question is, where is the money, the cash in the economy? Where is that going to go? Is it going to go into Bitcoin? Is it going to go into stocks? Is it going to go into bonds? And a lot of investors at the end of the day are going to be looking at that higher and higher treasury yield. The higher it goes up, bond prices are moving lower, they're at a better discount, the yield is higher, the investment thesis to go long bonds is going to get stronger and stronger. And the investment thesis for the average expected return for equities, the average expected return for crypto, is going to be looking worse and worse versus that fixed risk-free rate of return from treasury notes. I'm not saying you need to go all in on bonds at the end of the day, guys. And again, that's the important dichotomy here that I see some people struggle with, is that because I'm talking about the dollar and bonds, that's why I'm telling you go long, back, go long. No, it's just saying here that as this moves higher here, this is going to strip a lot of liquidity and a lot of that supposed momentum that is likely to come in usually for crypto's price in the past. It's the important dynamic to understand here. It doesn't mean, for example, we're losing faith in Bitcoin. No, it just likely means that it's not going to accelerate like it used to in the past. And there's a good chance it could come pulling back when a lot of people least expect it. The Fed still has a likely long way to go here before it's done reducing its balance sheet. And by the time it's done reducing between somewhere in our target range, somewhere between 20 to around a third of the peak valuation of the money supply, I think by that time, crypto is not going to be faring better when global liquidity is contracting. We cannot ignore the reality that when liquidity is increasing, the money supply is increasing, Bitcoin usually moves up. It's a money debasement hedge. But when that liquidity moves down, we can't simply sit there and ignore that Bitcoin's gonna, not get hit by that. Of course it is. I think we've been seeing that since back in November of 2021. And it's why this is going to be a different bear market than before. So I think it's, again, just what we need to consider here as we're watching Bitcoin here. We're sticking to the weekly timeframes, the monthly timeframes. We're watching how it's reacting within this range. We're not losing sight of the key fundamental price action we need to be watching here. So anyways, guys, that's it for the core part of today's video. I want to go ahead, though, and spend some time to talk in the larger topic and discussion of broader adoption of crypto, and spend some time to talk about a really interesting technology created by the team at Tectum called Softnotes. Let's go ahead and dive into it. Alrighty, everyone, so in today's sponsored review, I want to spend some time to talk about what may very well be one of the biggest breakthroughs we've seen when it comes to actually making crypto usable when it comes to payments and settlement for transactions. Today, we're going to be talking about none other than Tectum, and more specifically, its groundbreaking technology, Softnotes. I want to spend some time to talk about how Tectum is aiming to change the game when it comes to the way that we think about utilizing cryptocurrencies beyond just a store of value. Crypto has clearly over the past few years, whether it be stable coins or more specifically digital assets like Bitcoin and Ethereum, proven that there is room for this alternative asset class, and this idea of either tokenizing real world assets such as currencies or specifically utilizing digital currencies that are limited and capped in their supply. However, we gotta be honest here that there are a lot of critical issues when it comes to crypto. Crypto itself is not very private. There's a limited amount of transactions that can be verified on public blockchains. This is even a limitation, not just for cryptocurrencies, but also stablecoins. And outside of that as well, we generally are not seeing merchants accepting cryptocurrencies. It's a brutal reality here. The user experience, unfortunately, prevents this from happening in the mainstream. So how do Softnotes go about solving for this issue? Well, a simple way to think about Softnotes and their value proposition is that they act like a digital dollar backed one-to-one with a specified denomination of cryptocurrency. So let me go ahead and explain this. In the same way that we have, for example, dollars in the economy that are denominated by $1, $5, $10, $20, or even $100 on a specified bill, you can have a Tectum Softnote or a digital bill that is backed by a specific amount of, say, Bitcoin, like 0.01 BTC or 0.1 BTC, or even an entire Bitcoin that is backing that specified Softnote. And you're able to utilize this in commerce, whether you, for example, want to pay someone for a merchant transaction, or if you are a merchant yourself and you want to actually claim that underlying crypto. Once you have access to that Softnote, you can actually access the underlying Bitcoin that's backing that respected dollar or Softnote. So this is really exciting stuff here. This essentially allows us to do peer-to-peer transactions off-chain and essentially not having to pay additional network fees in order to do so. A huge user experience improvement. We now have more added privacy, lower cost for transactions, and practically unlimited scalability. And we don't have to stop at just doing this at Bitcoin. If you're a merchant who wants the stability of the dollar, you can essentially have USDT or USDC backing for Softnotes, as well as a variety of other cryptocurrencies as time progresses. This is a huge deal for the user experience of using crypto in everyday transactions. Gone are the days where we have to rely on expensive on-chain transactions on various crypto networks, where not only we're exposing our transaction history over the public ledger, but on top of that as well, not having to pay network fees that in some cases are just as expensive as the amount of money we're trying to send. This is an incredibly relevant technology for the crypto space, and even if it's just an alternative form of conducting crypto payments, it opens up a whole range of use cases that just aren't possible right now with decentralized networks, such as micropayments and privacy-preserving transactions. So how does this actually work behind the scenes? How do we go about creating a Softnote? And more specifically, once we've minted a new Softnote, how does the transaction process look like versus a traditional on-chain transaction? Well, to start here, in order to mint them, we utilize the Tectum Softnote interface online, where we log into our account and we choose a specified denomination of Softnotes that we'd like to mint. So for example, let's say I wanted to mint a Softnote for 0.01 BTC. Once I've chosen that denomination, I'm going to be given a contract address where I have to deposit the specified amount of crypto in order to actually back or fill that Softnote. Now, once we've done this, we've done all the heavy lifting. We officially have access towards a Softnote that has a right of claim over 0.01 BTC. From here on out here, this is where the powerful stuff comes in. Now I can exchange that Softnote giving a specified serial or unique link over a messenger app, over email, or towards a specified merchant. And all I have to do is give them a 6-digit passcode. And this effectively allows them to have claim of ownership over that Softnote. Whereas in a traditional transaction, we're conducting transactions from wallet to wallet on chain. I was able to essentially exchange a private key or ownership over those funds, or think of it as a password to those funds, without having to transact on chain. And here's the best part. Unless the merchant wants to actually go about claiming that Bitcoin right away, they can, like a dollar, continue to use it for other goods and services, or essentially continue to do transactions with other parties. Just like how a merchant might earn a dollar from its sales for a product or service it gives out, and then need to spend it to pay employees or to go out and buy equipment, you can continue to use Softnotes off-chain from one person to another in a peer-to-peer fashion, continuously using it potentially upwards of hundreds, if not thousands of times before someone may even claim it. And this will help to not only take throughput off of the Bitcoin network and other respective networks in the crypto space, but outside of that as well, continues to add more and more privacy and reduce the overload of transaction fees when we're conducting transactions for one another. It's a huge benefit. So to see this live in action, Russell, the CEO of Tectum, went about creating or minting a new Softnote with a specified denomination of 0.001 BTC. After he loaded up the contract address and officially minted the Softnote, he was able to send the specified serial link or URL over to me via Telegram with the unique 6-digit access code in order to actually access the Softnote, the code that only I should know about. And from there, once I was actually able to take that 6-digit code within the Tectum wallet and input it, I was able to essentially claim access or ownership over that Softnote so that Russell no longer has access to it, and I officially own a right to claim the private key or transaction capabilities of the underlying Bitcoin. So I have every right or ability to go out there and burn the Softnote and send it to my wallet, or if I want to continue using it for various payments, I can do so. It's a really exciting system, and I think for me this was that kind of aha moment that at a minimum this is going to really give an opportunity for people to have a more privacy preserving way to use crypto, and outside of that as well for merchants, I think in many ways, to be able to start utilizing Softnotes in very unique ways. So that about wraps up our core focus on the Tectum Softnote technology. And if you're interested to learn how you can actually go about registering an account so you can mint your first Softnote, or how you burn Softnotes, or any other type of ways that you may interact with them as a consumer or merchant, then I definitely recommend you guys not only check out the website, which I'll have linked down below in the description, but also the YouTube channel, which has a lot of great video-based content and explainers on how to get started. However, from here on out, I want to spend some time to talk a little bit about the Tectum blockchain, where all the passcode changes and core transactions are happening, as well as maybe some other future applications on top of the Tectum blockchain. But outside of that as well, I want to talk about the core utility token of the network here, the core currency here within Tectum's network, and that is the TET or Tectum token. So let's go ahead and spend some time to talk about that here. So to kick things off here, it's important to understand that the Tectum blockchain serves as vital infrastructure for Softnotes to function. Any transaction type you can think about, whether it's minting a new Softnote, exchanging ownership of a Softnote, in this case utilizing the 6-digit code in order to transfer ownership or claim ownership, thereby generating a new 6-digit code of ownership to exchange later on, or burning Softnotes, are all going to require the Tectum blockchain behind the scenes. Now the good news about this is that as a user, you don't really have to understand all the intricacies around how to interact with it, as it's baked into the wallet interface and really easy to use. But what's great about this is that as we're considering Tectum's technology of Softnotes being utilized by merchants across the world, similar to Visa or MasterCard for debit card networks, we need to have high transaction throughput. Not to mention, if we talk about cash-based transactions, which again, at the end of the day, could be technically scaled limitlessly, we need something that is able to reach that degree of scale if we really want to see it adopted long-term. And the good news here is that Tectum's blockchain can scale upwards of 1 million transactions per second, far outweighing the vast majority of other networks out there in the world, even those that are focused on competing with traditional payment rails like Swift, such as Ripple, and other types of networks out there. So this is really exciting to see. Now, the way they're able to do this is utilizing a proprietary record change signature management algorithm. Now, essentially, without going into all the details of this is essentially utilizing a lot of the traditional encryption or hashing algorithm techniques that have been out there for a long time without requiring this heavy block load on all nodes to participate on the network and having to continue play through old consensus mechanisms that can really take a long time and cost a lot of computational resources. If you want to read a little bit more into what this consensus mechanism is and how transactions are verified before you go about minting any soft nodes or utilizing the technology, again, you can check it out here on the white paper, which is accessible on their website. They also implement a really interesting technology called Softnote cryptographically guaranteed sovereignty, which is essentially allowing for that private key exchange when you're changing the 6-digit code. And it's done in a way utilizing zero-knowledge proofs, a really high-leading, privacy-preserving technology that's been around for a long time and is utilized in other blockchain protocols. But essentially it's going to allow for that private key exchange without having to conduct any on-chain transactions on the core network that that currency is reserved on. However, again, we can take a look at the block explorer here, and what's really cool is you can see different types of event hashes here, where again, we have people minting different types of soft notes. We can go here and see here that there's the different types of serial IDs, and along with that as well, the pin where someone was last realizing them. So it's really exciting here to see that the network itself does have people minting and utilizing soft notes and exchanging them, and you can find those on-chain confirmations within the Softnote Explorer for the Tectum blockchain. Now, the big thing here I want to spend some time to talk about is the Tectum tokenomics, and more specifically, the token utilities of TET. Now, TET, as we mentioned with the Tectum blockchain, is vital here towards conducting various types of transactions. The first and vital use case of the TET token is to mint new soft notes. So for example, if we come over towards the Softnote wallet interface and go to the mint house, we're going to go about trying to mint a new USDT soft note. As we go throughout the process, though, we have different types of soft note denominations, such as 1,000 USDT, 5,000, 10,000, 50, 100, 500,000, and even $1 million worth of tether. Now, if we simply do a smaller soft note, like $1,000, it's only going to cost us about 2.2 TET. But as we increase towards larger amounts, we can see that that value or a required amount of TET to burn is going to get larger and larger and larger, with $1 million requiring us to utilize 220 TET. And if we want to create multiple soft notes of varying value, then from there it's going to cost us more and more as we continue to move up. So this is an important thing to understand here. One of the big demands for the token here will be the minting of new soft notes or the broader adoption of the technology, which again would be a long-term burning or deflationary mechanism on the token. Outside of that as well, merchants will pay fees in TET while they're not having to pay expensive network transaction fees or gas fees in the Ethereum network. The good news here is that at the end of the day, they have a very relative predictable fee of around 1% on transactions. So it's really much better than most networks here when you're talking about micropayments, when you're talking about everyday transactions, and the vast majority of transactions as a whole. Not to mention the convenience of utilizing the technology and the simple exchange of the 6-digit passcode. So this is a really big benefit here as well for TET. Outside of this as well, any other layer 1 gas fees or transactions that are being conducted, any of the gas fees in this case will be paid in TET rather than paying in some various other forms of currencies. Outside of that as well, as there are new applications being built with the T12 token standard, which is the standard token format on the Tectum blockchain, as there are potentially more forms of value in the network and other types of transactions and maybe even other types of dApps or use cases outside of the Tectum Softnote, maybe even ones that complement the Softnote technology, that is also going to be paid as well, similar to layer 1 gas fees in TET. And outside of that as well, there are things like access to pre-seed incubated projects. As I hinted a moment ago, there may be some other different types of developments in the network itself as time progresses, and also as well access to Tectum products within the Tectum blockchain. So there's all types of different utilities here, the main one again being that minting of soft nodes, so that there is a direct correlation here with broader adoption of the network and demand for the token. And I think that at the end of the day, that's a really solid design mechanism here where it is going to be used as gas on the network. And when you consider the fact here that Tectum is kind of in a league of its own for this use case and is only sitting at right under a $5 million market cap for circulating value, I have to say this is a really interesting risk-reward play for me personally in the long term. I think overall, if you like the technology itself, the token is pretty directly correlated with its broader adoption, or making a bet on its broader adoption long term. And it's holding up relatively well here, considering that it launched in the middle of the current environment right now, which is not too favorable to altcoins. So I have to give the team hats off here for building something that definitely looks really exciting. And I think long term, as we see more and more adoption of it and more improvements on the user interface and explaining this concept, which to be fair does take some time to break down and truly understand, it'll start to become potentially second nature for many of us within the crypto space, especially those who are looking to be merchants or participants in this crypto ecosystem and actually utilizing it for payments rather than just a simple store of value. I think the beautiful thing about Tectum, and more specifically Softnotes as a technology, is that it does potentially give us the best of both worlds. We not only can have a store of value through digital currencies like Bitcoin, Ethereum, or allowing even maybe more destabilized parts of the world to rely back on dollars and have them readily accessible. But outside of that, having the ability to actually utilize it in commerce, allowing for some degree of privacy in cryptocurrencies, which is still an existing problem nearly a decade later from when Bitcoin really got started. And outside of that, we have a lot of other issues around gas costs and just the simple throughput of transactions. With Softnote and the Tectum blockchain, there is a chance here that we might be able to put a serious dent not only in these problems, but also towards the broader adoption of cryptocurrencies. Well, that's it for today's video, everyone. Thank you all so much for tuning in. If you guys liked this review, I highly recommend, if you liked it, to consider dropping a like, and more specifically, check out the links down below in the description so you can start to test around with the technology. And they have a support chat on their website, so if you guys are interested, whether you're a merchant or a user, and you have further questions, definitely consider reaching out to them and let them know that DataDash sent you. Anyways, guys, that's it for today's video. Have a wonderful rest of your day, and I'll see you all in the next one. Take care, everyone.